Many investors wonder what to do next as the stock market crash continues. While it's impossible to predict precisely how the markets will react, there are several steps you can take to protect your portfolio and ensure you're in an excellent position to capitalize on future opportunities. Hello everyone, welcome to Success Wisdom channel. If you're new to this channel, do like and subscribe to the channel. This video will discuss stock market crash will get worse. What should you do? What is a stock market crash? A stock market crash is a sudden, steep decline in stock prices. It usually happens when investors lose confidence in the market and start selling their shares. This can cause a domino effect, as other investors see the prices falling and decide to sell their shares. A stock market crash can have a ripple effect throughout the economy, as businesses see their stock value plummet and consumers hesitate to spend money. A severe stock market crash can lead to a recession or depression. While crashes can happen in any market, they are most likely to occur when the market is overheated. With prices rising too quickly, this can create a bubble that eventually bursts, leading to a sharp price decline. Why is the stock market crashing? There are several reasons why the stock market may be crashing. One reason is that there may be too much speculation or investment in stocks that are not based on fundamentals. When belief drives up stock prices, they become detached from the company's underlying value, making a crash more likely. Another reason for a stock market crash is a sudden change in investor confidence. If investors believe the market is overvalued, they may start selling their stocks, leading to a sharp decline in prices. Finally, external events can also trigger a stock market crash. For example, an economic recession or political instability can cause investor confidence to plummet, leading to widespread selling and a sharp decline in prices. While many factors can contribute to a stock market crash, these are some of the most common causes. The signs of a stock market crash will get worse. As the saying goes, a rising tide lifts all boats. This metaphor often describes how a healthy economy can benefit everyone. However, it can also be applied to a stock market crash, just as a rising tide can lift all boats. A crashing stock market can drag down even the most essential businesses. The signs of a stock market crash that will worsen are already evident in the current climate of uncertainty and volatility. Overvalued stocks, high debt levels, and slowing economic growth are all red flags that could signal an impending crash. If these trends continue, the consequences could be severe. Businesses could fail, jobs could be lost, and retirement savings could evaporate. While it's impossible to predict when or how a crash will happen, it's clear that the risks are increasing. Anyone exposed to the stock market should be aware of the potential disaster. Don't forget to like and subscribe to the channel if you like this video. How will the stock market crash affect us? The recent stock market crash has undoubtedly been a shock, and it's still too early to say definitively how things will shake out. However, it's important to remember that the stock market is just one part of the larger economy and doesn't necessarily reflect the economy's health as a whole. That being said, there are a few ways the stock market crash could affect us. Firstly, it could lead to less consumer spending as people feel less confident about their financial future. This could lead to job losses and a decrease in economic activity. Additionally, the stock market crash will get worse and could impact retirement savings, pension plans, and investments in other areas such as real estate. While it's still too early to know exactly how things will play out, the stock market crash will likely have at least some effect on all of us. What should you do if you have money in the stock market? Many people invest in the stock market to earn a return on their investment. However, the stock market is volatile, and there is always the potential for losses. As a result, it is vital to have a plan in place for what to do if the value of your investments decreases. One option is to hold onto your stocks and wait for the market to rebound. Another option is to sell your stocks and take the losses. However, this strategy is not without risk, as the value of your stores could continue to decline. This may be painful in the short term, but it can help you avoid even more significant losses. Whatever strategy you choose, it is essential to have a plan in place so that you can make informed decisions if the value of your stock portfolio starts to decline. What can you do to protect yourself from the stock market crash? A stock market crash is a sudden and dramatic decline in stock prices. It can occur from various reasons, including economic recession, inflation, interest rate hikes, and political instability. While a crash can be a financial setback for investors, some steps can be taken to protect yourself from the worst damage. One of the most important things is to diversify your investments. This means not putting all your money into one investment, such as stocks or bonds. Instead, spread your money across different assets, such as real estate, cash, and gold. If the stock market crashes, you will still have other investments to fall back on. Another thing you can do is to invest in low-risk investments. These are investments that will not likely lose value even if the stock market crashes worsen. Some examples of low-risk investments include government bonds and CDs. Finally, make sure you have an emergency fund to cover your unexpected expenses. This will help you avoid selling investments at a loss if the stock market crashes. How to stay calm during a stock market crash. Despite the current market volatility, there are several things investors can do to stay calm during a stock market crash. First and foremost, it is essential to remember that stock market fluctuations are normal and expected. Over the long term, stocks have consistently trended upwards, so it is necessary to take a long-term view when markets are down. Secondly, it is crucial to have a diversified portfolio that includes different assets classes such as bonds, cash, and real estate. This will help to minimize losses in any one particular asset class. Finally, it is also important not to make rash decisions when the markets are down. Selling everything in a panic will only lock in losses and make it more difficult to recoup those losses when the markets eventually rebound. The current state of the stock market is worrying. If you have any money invested in stocks, it might be a good idea to start thinking about how you can protect your assets. While there's no guarantee that the market will rebound soon, there are specific steps you can take to minimize your losses if it continues to decline. You may contact your financial advisor today for more information on how to help you weather this storm and come out ahead. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.